Hello everyone, George DeSantis here with a look at the market for the week ending Friday, August 2nd, 2019. Um, Before we begin, let's do the usual, bring up a disclaimer, ask you to take a look, especially the last sentence here. I'm not a professional investment advisor, so this is no attempt to give professional investment advice. It is something I do for my own purposes and put it as a video on YouTube, and if you care to look at it, you may do so. Let's begin to look at some charts on the market. We'll start with the weekly chart of the S&P 500, as we usually do. Now, on Thursday, I did a video. I sent it to you guys. What prompted me to do so was that for some time we've been seeing these divergences, especially on the weekly chart of the S&P 500. And then I was looking at some of the other indicators that Jake Bernstein uses, some of these oscillators like momentum oscillator and the detrended price oscillator. And I said, wow, this thing is going to go further down. That was on Thursday. Well, on Friday, we knew what happened. We did go further. We had a big turnaround of about 600 points. We were up over 300 and we had a turnaround to about being down about 300. In any case, let's take a look at where we are now. Let's look at some bullish indications first. We still have the 4 EMA above the 9 weighted exponential moving average, and that is above the 30 weighted moving average. So that's, to a large extent, that is bullish. And this is a weekly chart. So we're looking at least a medium term, an intermediate term chart here, if you wish. If we go down to the other bullish indications here, you see RSI 12 is still above the 40% line, that yellow line. And so that is an indication that the bulls haven't quite thrown in the towel yet. So I think we could say that. Williams percent R is still above that minus 50 magenta line. And again, bulls are still having something to say about this market, although they got beaten up last week. And for some weeks now, actually been taking a beating. Not the bearish scenario. You see, notice that parabolic switched to being above the most recent bar, last week's bar. So that indicates that parabolic is saying, hey, we had an uptrend and now we have a downtrend. The second bearish indication is we have a major bearish engulfing candle. This candle, the body of this candle totally engulfs this candle. That's a bearish engulfing candle. The other bearish indication is that we still have this bearish divergence of MACD. You can see that as we made a new high here, MACD made a much lower high than it made here. So that's a bearish divergence of MACD. These are all the bearish indications. Now, I asked the question then, as I did on Thursday, where do we go from here? Are we going lower? Are we going any higher? Are we going to find support here? Well, let's look at some situations here. We can conceivably find support at this first major Fibonacci retracement level, which is the 38.2 level, which is this line here. And that was at 29.13. And I mentioned to you that we might find support there. Well, we seem to have found some support so far. Now, the low of this bar was actually 2914.11. So you can't get any closer than that. So where do we go from here? Hey, we can go down to the 50% line, which would be 2879. All right, that would be the next Fibonacci level, and that would be a 50% retracement, which is not uncommon when you get pullbacks or retracements. So that's what I'm looking at. Possible support at this level, 2913, or 2879. Call it 2880 if you wish. Let's take a look at a daily chart. So here's a daily chart of the S&P 500. We often look at this one. I left the Fibonacci retracement levels on so you can see how close we came to that. It was just above that 2913 level that we made a low, this low here. So we, as I said on the weekly chart, quite possible we might just find support here and start another rally up. But I think that if we get a rally up from here, we're going to come back and test it. That's the usual thing, I think. We're going to come back and test the 29.13. So we might go back up here now. We might find some support and go up here. But then I'm looking for a test of this level, this 29.13 level. On the other hand, if we do not find support here, well, we go down to 28.79. Now notice that this support level, this Fibonacci level here, was exactly where we found support back here in the end of June. Now the next support level at the 50% retracement level will be 28.79, and this is where we found support back here. So we have some clean support resistance lines drawn here. And so either we're going to go up from here and come back and test it, or we're going to go down to the 28.79 and do something very similar. That's as far as the general market is concerned. I raised some cash. If you want to know what I'm doing, I sold some stocks, raised some cash, especially in one of my IRAs, and because I've been doing that for a while, because I got burnt in 2000 when the market went down 20%, and I did not use stops or was not watching the market carefully. And many of you know that it cost me 7 figures. Big tuition expense. And now we look at some charts from stockcharts.com. This one here is the new high, new low index, and we've seen this many times before. What I'm noticing here is that we are seemingly holding above this 50-day moving average. Okay, and as long as we hold above that, we should be okay. So the spread between new highs and new lows is still trending above that 50-day moving average. And I think this is why, for example, one of the people that I saw on CNBC this week, Katie Stockton, who is a very well-known, I've seen her on TV for years talking about the market. She's a technical analyst of great renown. And she was saying we still have an intermediate term bullishness in the general market. So I would take her advice on that. I believe her. Let's take a look at another chart. Here's the weekly chart of the S&P, which we often look at here. We can see the impulse indicators, blue, red, and green bars. And notice that last week I was talking about this divergence now for weeks, this MACD divergence. Well, sure enough, this is what you get. When you have a weekly divergence, you ignore it at your own cost, and it can be very costly. So, as I mentioned before, so this weekly bar is now red. We have to wait for some indication of a turnaround before we get very bullish again. That's what this chart is telling me anyway. Do not go buying stocks with both hands right now. Let's see if it continues to go any further down. We might continue to go further down and come closer to the 30-day weighted moving average, or 30-week weighted moving average. Here's a chart with a McClellan oscillator, and what I notice here, and I saw it before but never really placed much emphasis on it. And again, you know, ignore these things on your own, at your own course. This thing was trending down. This was showing us divergences all the way down here. And this is really based on the advanced decline line of the NYSE, I believe it is. And so we had this bearish looking chart for a while. And if we look at the percent of the S&P 100 stocks above their 200-day moving average, well, we are now at that critical level around 65, 66, and as long as we stay above that, we could expect a little more bullishness here, according to this chart anyway. Now here's a chart of the SPY, which is of course the spider ETF of the S&P 500, and you can see this pullback here, and it's closing right there at that long-term moving average that Shaken uses. Don't let this be misleading. This relative strength breakout is simply the relative strength of the S&P versus the Russell 3000, and that doesn't tell us very much. In any case, you can see that the market was overbought rather, and it continues to go down, and the money flow has dropped too on the SPY. So here's a list of stocks that I showed you before for some weeks now. And some of these I still own, like Microsoft and iPay and Accenture. So this is Accenture. You could see it meets all these criteria except for oversold. Oversold is neutral. So the next move should be up. iPay, that ETF doesn't give us the checklist, but you can see that it's oversold. It's oversold now, and that's because Visa and MasterCard pulled back a bit. Microsoft, many of these stocks are going to be oversold, but Microsoft was overbought and is pulling back a little. Synopsys, which I own, this one has pulled back quite a bit, and it's now very oversold. So on the checklist, if we could put this one back up, you can see that it has strong indications on 5 out of 6 things, right? XLK is one of these ETFs that I bought and sold over the years. I don't own it right now, but you can see that it's now touching that long-term trend line. Visa, as I said, it pulled back a bit, and now it's an oversold buy alert here. So even though it pulled back a bit here, it was overbought and pulled back a bit, quite a bit, and now it's oversold. So now it's a buying opportunity if you don't own it. Adobe, I'm not sure what Adobe is doing because it's oversold, and I don't own it right now. But these are stocks that you want to put on some of these I will have on leave on my watch list, that if I don't own them, I could buy them back because they are becoming oversold. And I'll just flip through a few of them. I don't own this one. Cummings I owned for a while, and it became overbought, so I sold it. And I don't like this relative strength performance here. PayPal, another one, became very oversold. So PayPal may be one of those stocks to keep an eye on again. I noticed that IBD says that the mutual funds are buying it up at this level. MasterCard becoming oversold like Visa, and came in with pretty good earnings, I think. And I do own two IPOs. This one is Zscaler, computer software. I think it's security. Now it's oversold. And I also own Zoom, and that one also came down a lot, became oversold. These are some of the stocks that I own, and some of them I don't. I just have them on a list here. I could show you another list I just made up of the stocks that meet the criteria for the checklist, and you'll see we should see a lot of green here. And I'll just flip through a few of them, and you can make note if you wish. I don't own any, most of these I don't own, but I'm putting them on a watch list. You can see that was Accenture, and this is an aerospace and defense stock, and apparently that's one of the sectors that's doing very well, aerospace and defense. Aerospace and defense and semiconductors and software stocks are all doing pretty well. Funds are buying them up. This stock is oversold. This is a business service company, but you see they have most of these criteria met, most of the 6 criteria. So I won't worry to go through any more. And we've come to almost the end of our 15-minute period. So be cautious, take some precaution if you have to buy puts or whatever to protect yourself on the downside. But don't worry, this will be over. This too shall pass. Have a nice weekend. I hope you had a good holiday. Bye-bye.